Hello, I'm Hanna Howard, a research analyst focused on media here at Gabelli Funds. Today, I will be discussing an overview of the music industry and why we continue to like the sector longer term. Music remains one of the most under-monetized forms of entertainment today, and consumer spend on music is expected to remain resilient in a higher inflation and weaker macro backdrop. The quality of the music business has improved significantly in recent years as advances in technology and evolving consumer consumption trends have led to the rise of streaming, which has accelerated the shift from one-time, lumpy sales of physical products to a recurring subscription-based model. The global music industry generated nearly $33 billion in net revenues in 2021, representing an increase of 18% year over year. For today's discussion, we will be primarily focusing on the industry's two main business segments, recorded music and music publishing, which reflect the two primary types of copyrights involved in music. The music industry is highly concentrated. The top three players have roughly 70% of the global recorded music industry and about 60% share of the global music publishing market. The recorded music side of the business, or the record labels, own the copyrights for the sound recording, so the particular performance of the musical work that has been fixed in a particular recording format, for example, a CD or digital file. Record labels discover and develop artists, support the creation of audio and audiovisual content by recording artists, and market, distribute, and sell and licenses this content across a broad range of formats and platforms. The business generates revenue through the physical sales of this content in formats such as CDs and vinyl records, and from its distribution to music streaming and subscription platforms. Recorded music content is also distributed to consumers through multiple other platforms and forms, including films, television, and video games. In 2021, the global recorded music market saw record growth. It was up 18.5% year over year, to just under $26 billion. This was primarily driven by streaming growth, which was up 24% year over year in 2021. However, physical sales grew for the first time in over 16 years and were up over 15% year over year due to the improving mix shift towards vinyls, which has now recorded over 15 years of consecutive growth. The three major record labels took share in 2021, reinforcing our view that scale is increasingly important in today's digital world. In recorded music, Universal Music Group is the market leader, followed by Sony and then Warner Music Group. There are also many mid-sized and smaller players that account for the remaining 30% or so of the market, including independent record labels. The other primary segment of the global music industry is music publishing, which owns the copyright for the musical work, which is the underlying composition created by the songwriter or composer, along with any accompanying lyrics. Music publishers are focused on acquiring and administering rights for musical compositions and licensing them for use in multiple formats. Music publishing revenue grew 17% year over year in 2021 to just under $7 billion globally. This was driven by similar growth drivers to recorded music, but at a slower rate given differences in revenue mix. They have a greater share from performance and sync. In music publishing, Sony Music leads, followed by Universal Music Group, and then Warner Music. There are also many mid-sized and smaller players that account for the remaining 40% or so of the market, including many individual songwriters that publish their own works. While the shift to streaming has been occurring for some time now, the sector continues to benefit from these and other structural tailwinds. In our view, the most notable continues to be related to the rise in digital consumption of music and music-based entertainment. So our long-term outlook for the global music industry remains intact, even in a more challenging or recessionary environment. We see further runway for growth ahead in both paid streaming, which will be driven primarily by increased penetration of the subscription streaming subscribers, as well as price increases by the platforms, and by ad-supported and emerging streaming platform opportunities. Regulation around music rights has also improved in recent years, benefiting content owners, and we could see additional upside as changes are implemented and take effect from here. Thank you.
Investors should carefully consider the investment objectives, risk, charges, and expenses of the fund before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 1-800-GABELLI or visit www.gabelli.com.